Andy, what's happening? Angie, Ange checking in with you. You know, when I'm not on the Morning Hustle show, Monday through Friday between 6 a.m. and 10 a.m. with my good friends, Head Crack, L'Oreal, and Billy Sorrells, I'm actually like heavily on the prowl. I'm snooping around for the latest stocks to invest in. That's why I even have a newsletter called Stock Snoops. You know, we do it every week, every Monday on Money Making Monday, which you could check us out on Hot 96.3 as well. Just talking about my experiences with the stock market as I've been investing for probably over the last 15 years. I come from a family of CPAs and financial advisors, and so it's a family thing for me. And so when I saw so many people excited about and wanting to get into the stock market, I just felt like, you know, at this Inspire You convention, we should talk to actual traders who are actively trading in different capacity. And so with me, I brought two good friends. One is a day trader, and one actually has been building her own portfolio slow and steady. And she's also my sister. So we'll start with her. She goes by the name of Adrienne. So we're going to bring Adrienne into it. She's also my co-founder on the Stock Snoops newsletter. What's happening?
Good evening, good morning, good afternoon.
We don't know what it is. It's the pandemic. We're in it. We're here. But you're live from New York, right? Checking in for New York.
Live from New York City, doing well during this pandemic.
Yes, and so is your portfolio, but we'll talk about that later. And then up next, she was my program director in DC, and she was my boss for many years. And now she's a very good day trader. Like, she got into the day trading game. She goes by the name of Neke Howse. And now we don't talk about radio anymore. We talk about companies. We talk about what we're buying today, Neke.
Exactly. That's exactly what we do, Angie.
I love it. The pivot is real. And ladies, thank you so much for joining me on this conversation. I think so many people right now are talking about making money in the stock market, but don't know where to begin. So I want you all first and foremost just to share your personal journey in stocks, because I think it's important for us to share. The more we share our experiences, it's going to help more people who are trying to get into this. So Adrienne, I'll start with you. How did you get into the stock market game and actually using your own money and building your own portfolio?
Well, I actually started about over 15 years as well. I started with an IRA and wasn't really knowledgeable at the time. You know, I was putting in $25 a month even, which is too low, but you know, that was just the amount of attention that I gave to it. After I started working at Macy's, that's when I actually started to dabble in individual stocks, and buying Macy's stock was actually one of my first stock purchases. And after that, I invested in other companies like Visa when it became public. And after I saw Macy's stock double over time, that motivated me to want to invest more in stocks. So since then, I've been investing in individual stocks as well as mutual funds and ETFs. And currently, I'm a hybrid between a long-term investor and also a short-term trader. It just depends on my goals.
Got it. And Neke, tell us a little bit about your story in the trading world. What got you into it?
Well, I was tired of working super hard while my money was on vacation. I'm like, something's not right with that. So I decided to learn how to trade. And I tried to teach myself, which was an epic fail. So, and I'm sure a lot of people have tried that. So I'm more of a day trader. I swing. Sometimes I take long-term trades. It just depends on what the market is giving me. I am a Forex trader first and a futures trader second. And I am pretty much familiar with options, but I still have some grinding to do in that area.
Yeah, Neke, I want to go back to Forex trading because I've seen that when it comes to like Twitter and social media, everybody's talking about Forex trading. So tell us a little bit about what that is and why you prefer Forex.
Well, for somebody that doesn't have a lot of capital to trade, Forex currency trading, and that's what it is. It's currency pairs. And it's a way of being in another country if you're not able to travel and still be sitting in your living room. So it's just two pairs going against each other. There's a base and then there's a quote. And that's just pretty much what you do. It just depends on if you're, high on the curve, low on the curve, if you're in the middle of the curve. It's like buying a shirt. You don't want to buy a shirt when it's overpriced, right? And this is with anything that you trade. You want to buy it when it's on sale. And so that's basically currency trading. It's just different language for currency pairs.
Got it. And so
currency pairs, they match up they cross pair with other things. Like if you like oil, if you're an oil trader, then there's a currency pair that kind of matches in sync. If you're S&P, which is the S&P 500 trader, there's currencies that move along with that. So there's different things.
Yeah. And you talked about like if you don't have a lot of capital. So we noticed that with a lot of people, right? Like you may not have thousands and thousands of dollars. Speak to that in terms of like, so if I have, let's say right now, maybe I only have $500 to invest. And would you say Forex it makes sense if you have like only 500? Is it something that you could kind of be in and out on a daily basis?
That's doable. You have to, the leverage is 1 to 50, but you have to, in anything that you trade, you have to know how to manage that trade. You have to be well-versed in risk management. So you can with $500.
Yeah.
Like I have an account that I started with $250 because I wanted to see if I can trade from a smaller account. It's super difficult, but you have to take your emotions out of it and you just have to work and think like a machine.
Yeah, absolutely. And I want to talk a little bit about temperament when it comes to trading, because, again, a lot of times we're impatient and the thought is that if I buy Apple today, I should be like as rich as Steve Jobs, may he rest in paradise. I should be that rich tomorrow, or we want to be Jeff Bezos rich. So can Adrienne, going back to you, speak a little bit to the type of temperament when it comes to buying and holding and how you've held on, especially when a trade starts looking like it may not, a company you invested in may not do what you thought it would do, and, not bailing on it essentially.
Absolutely. And I definitely have had stocks that have gone in both directions, which, we'll talk to about wins and losses later. But I will say definitely you have to try and remove your emotions from investing. I think the best way to keep your emotions out of investing is by having an exit strategy. So once you have an exit strategy, you're going into that investment or trade knowing that there is a specific target price that you want to get out of that trade. Because the thing you have to keep in mind is you don't make money unless you sell. So you can hold on to it for years and it's going to fluctuate in the market up and down. And I also think that if you have something on the long term, not paying attention to it for a while is the best way to also kind of keep your emotions and not, and keeping fear out of the picture. Because if you sit there and watch a trade on a daily basis and you're holding it for the long term, you will see that stock go up and down on a daily basis. And sometimes you may feel like you want to sell when you really shouldn't, especially if a stock is uptrending. It's definitely worth a hold. So definitely having an exit strategy and having a plan before you invest is the best way to keep your emotions out of investing.
Yeah. And Neke, I know when it comes to day trading, I feel like temperament is even more important because you're fluctuating hour to hour, maybe minute to minute almost.
So it's very important, I think, as a day trader that you understand how to read charts. And even if you know how to read a chart, there's still some like, I don't know, that kind of thing. But it's very important to understand a chart because you can be in an uptrend on a 5-minute chart, but on a weekly chart, you can be in a downtrend. And you got to look for the change of directions. You got to understand if it's just a change of direction or if it's a correction. You have to know these things, and you know these things by looking at charts and pretty much dating whatever it is that you like to trade. That means you have to know when it's mad at you. You have to know when it doesn't want to be bothered. You have to know when, this is our day to have a great time. You have to know those things, and you can tell by the charts and the candles in the day parts and the different day parts.
Yeah, and that goes back.
You have to have a plan.
Yeah, that goes back to education. Can we talk about how you all have managed to educate yourselves on trading? Like, how did you get started in terms of learning about it before you just started buying companies, Adrienne?
Well, I will say that it's definitely been an educational journey, getting in and out of stocks. I think definitely learning from failures has been a big part of my education. But also along the way, I will have to say, I didn't even understand what's called fundamental analysis of stock until I got into my MBA program. When I got to my MBA program and I had a course on financial planning and policy, we learned everything about fundamental analysis of a stock and analyzing it, analyzing the financials of a company, knowing the financial ratios and understanding how profitable that company is, how they're utilizing their money to really be able to recommend purchasing that stock or not. So I think fundamental analysis was the next step in my journey, which I have applied ever since. And it's been years now, and it's definitely have helped me to go in a better direction as far as what companies I trade or invest in. And then very recently, I have actually gotten training in technical analysis. So I can kind of have a much better approach to entering and exiting a trade. I'm learning candlesticking. I've gotten better at that. And just a combination of both has absolutely been a benefit to the stocks that I have invested in. I have gotten pretty significant returns, especially during the pandemic.
Yeah, Neke, I know you talk a lot about candlesticks and things like that. Tell us a little bit about your education in terms of like how you've been able to learn all of this.
I think the best thing that you can do is center yourself around other traders, even though, let me just say that, other traders that know what they're doing. There's a difference. because then even though it's like an individual sport, it's important to get other people's perspective. And it's definitely important to just kind of see and get some ideas of what other people are trading and that sort of thing. But you can't be all over the place. You have to, hone what it is. And for me, I trade what fits my personality. Like your sister, she seems all patient and, and to learn, and she has the time. Me, I'm like, go, vámonos. I'm like that. You know what I mean? And so I trade like that, and I trade my personality, and sometimes, it can be that way. So
yeah. So I want to take people through a trade. So Adrienne has this one stock she told me about a while ago called BuildABear. Okay. So can you tell me about this company, BuildABear, which we're all pretty familiar with BuildABear?
She's probably laughing all the way to the bank.
No, she is. She is. Because Neke, I'm like you. I'm like, vámonos. But the problem is, Adrienne tells me about it, and I'm like, wait, what? BuildABear? We about to buy BuildABear? So, Adrienne, tell us about BuildABear when you got into it, and what made you get into it, and how you applied things like fundamental analysis so that people can kind of understand, if let's say you have your Robinhood account, you're ready to buy a stock, kind of take us through your BuildABear story, because I always think it's really interesting, and I'm still kicking myself because I didn't do it.
Yes, I will. So back in March, when the pandemic was, just this unbelievable, event going on, and the stock market was pretty much crashing. What I did was I kind of took a step back and started researching some stocks that were probably good for a reopening trade. So I was looking for something that was beneficial before the pandemic, that was doing very well before the pandemic, that could potentially skyrocket once we return to normal. So BuildABear came on my radar. And I'm like, I love BuildABear. I love that it's a unique retailer in its own right. It doesn't seem to have much competition, because what other company is out there, letting you stuff your own bears and things like that. So I definitely like the company for its uniqueness. And what I did was I actually researched, I checked out, its press releases, its news, what was going on with the company, what it had been doing. I saw that recently they had partnered with Walmart, which, is the biggest retailer in the world. So that's a huge deal for that company as well. And so what I did was I listened to their, the latest quarterly conference call, which ended up giving me the go ahead to be like, okay, I should try my hand at BuildABear and see what happens. I mean, they had just turned profitable at the end of 2019, and we were in the first quarter of 2020. when the pandemic hit. So, I took a chance, and, lo and behold, over the course of, I guess, how many months has it been? 9 or more months, the stock, and based on just the news and the vaccine and all these other things that have been pushing the market higher, that stock has returned over 300% for me right now.
Which is crazy, because you told me about it. It wasn't even at $1 yet.
I had actually, I wanted to get it at 99 cents, but the day that I bought it, I had to end up buying $1.15. I said I settled at $1.15, and now it's, it's on the cusp of about $5 per share now.
Yeah. And so 300%, depending on whatever you invested in it, can be a significant amount of money for the year. I could have made my salary for the year, but I listened to you.
That's it.
But I had analysis paralysis per usual. I didn't jump on that. But it's doing good. How much does price factor into like what you buy, right? Because Adrienne, you'll also buy an apple that when it split was at $100 some. So what happened? How much do you all care about the price of a stock versus actually doing the research and looking it up?
Price is paramount for me before I even do research. And a lot of it just depends on the budget that I have at the time. If I have a small budget, I'm not going to go out there and buy a stock over $100. I want to have more of an opportunity to have more of a return. So I will research stocks. I love looking at stocks that are under $100, that are performing well, that are profitable, that are uptrending, that have potential to increase over time, depending on the industry, because the industry, the sector, that matters too to me. So I definitely, price is a big factor. That's kind of like my number one. I look at that, and that's why BuildABear was like, oh, $1.15. Okay. I'm like, really? That's nothing. That's peanuts. And then, of course, after that, that's when I start to really delve into the research and really start looking into their numbers and, end up determining, okay, is this stock right for me or not?
Yeah. And Neke, for you, tell us a little bit about a particular trade that you may have done that it was like, you saw something like stood out about it and it captured your eye. And what was that? What is that process like for you when you're determining what you want to invest in?
So my process is a little different. Before I open up any chart, I go to Forex Factory if I'm trading Forex currency because I want to see what they're doing in different day parts, right? And then I want to see what the experts are saying. And then after I do that, I go to Scotiabank and I look at the foreign exchange and I see what's going on there. And then I open up my chart and then I know the things that I'm targeting, like if it's a euro dollar, what I'll do is I'll pull up that chart and I'll see if it's in an uptrend or if it's in a downtrend. And I'm a trend trader, so I usually follow that trend. And price is very important to me, but however, I'm even looking for a safe place to buy. So that might be like low place, which I call low on the curve, because it's, it's probably in a correction or it's probably low for it. But also I look for when it's overpriced and I buy to sell. So I'll buy it when it's overpriced. And all that is I don't own the stock. So I'm borrowing it from the broker and I'm selling it and taking my money and I'm giving their stocks back. And a lot of people don't even know that they can do that. And that's called shorting the market.
Yeah. And that's kind of like, I feel like that's a bit more advanced once you probably really got to know what you're doing.
It's not brain surgery. It's just like honing your skill with anything. Like if you're a musician, then you practice every day. If you play ball, you practice every day. You look at the plays, you learn the fundamentals. To me, trading is the same. It's the same way. It's the same thing. It's not that it's, if you make it hard, it's going to be hard. And the one thing about trading, and I'm sure your sister will agree, is this: if you need to be right all the time, don't trade.
Agreed.
It's going to kill you. It's going to kill you emotionally.
Right.
You can't, because you're not going to be right all the time.
Right.
So when I was talking about risk management earlier, so let's just say, like in Vegas, Your odds of winning something is like 1 in 100. Whenever, the person sitting behind the machine, like, I'm gonna let this girl win. She looks like she needs some money, that kind of thing. Trading is a little different, meaning it's not like gambling, because I don't want anybody to think that. So if you're risking $125, right?
Mm-hmm.
And you try it 5 times, okay? And you lose 4 trades. So that means you've lost $500. But let's just say on that 5th trade, you make $2,000. Who cares about $500 you lost? Sometimes you can make $5K, and like you said, I'm done for the month.
Right.
But that's what I mean by we work so hard and let our money go on vacation. Our money is sitting in the bank doing nothing. It's not even getting 3 pennies. It's not even getting a penny. But I'm like, that's not right. I want to sit on the couch. So I always put at least 30 to 40% of my money up and make it work. Even if I'm in different trades, like, you're going to work today, you ain't sitting at home. When I'm sleeping, you working. You work 24 hours. I know here that could take a break.
I love that. Yeah. I love that thinking. Like, put your money to work. Make it go to work the same way you go to work.
Absolutely. Okay. You getting out of that banking account, you working.
So look,
then I'll put you back when I say so.
Right. So everybody that's watching right now, we talking making money in the stock market. I have my great friends, my family, Adrienne and Neke, both actively trading in the markets in different ways. And I think that they have so much valuable experience, again, to share. And just to be clear, we are not financial advisors here. We're not licensed to tell you, hey, do this, do that. So whatever you get from this and however it goes is not our fault one way or the other. Just giving you a heads up. Okay. I want to give that disclaimer before we continue on. And you should always speak to financial advisors, get as much information as possible so that you can learn all the different ways that you can make your money work for you. Seek advice from multiple perspectives. Don't just take any one person's advice. And so I know we've got a lot of people that are commenting right now and asking millions of questions for you guys. A big question I'm seeing is, how do you know when to sell? And I think this is a very important question because sometimes it might be, okay, I see it going up, up, up. Do I sell now? Or I'm losing money. Do I abort? How do you all, gauge when you want to sell? Adrienne, I'll start with you.
Okay, so here's the thing. Again, that's when you have to kind of have a plan in place ahead of time. And I would say definitely there's a certain sort of like an ideal percentage above the price that you bought it that you'd want to sell as it's going up. And there's a certain percentage below the price that you bought it that you will agree to lose if it goes down. And you can put, like stop loss orders in and things like that. You're actually purchasing the stock to kind of help you mitigate part of the risk management, to kind of help you mitigate to stop the loss. And I think that's another reason why when you start to see all these sell-offs kind of happen, all at once, it's because a lot of these people who know what they're doing when they're putting in those orders, they've got a lot of stop loss orders in. So that stock is automatically going to sell once it hits a certain price if that stock is downtrending and you're losing money. So that's kind of like to mitigate when you're losing. If the stock is going up, I think that's kind of based on your risk level. That's based on your risk level. That's based on, well, how much are you willing to exit? I'm going to give you an example. I just put in 3 sell orders on 3 of my stocks that have returned over 100% since March. So I had a couple of, stocks, including BuildABear. I'm not selling all of my shares. I only put as much as I'm willing to take profit on right now. So once it hits a certain dollar amount, that's going to sell and I'm going to take my profit. That's what I'm willing to take home. And the rest of the stocks, I'm going to take a chance and let it ride up with the market, especially, when we really reopen at some point next year, because I expect that these particular reopening stocks will continue to go up. But just to kind of mitigate some risk, because it could also go down, I'm like, hey, I made a good profit on, at a certain price. I'll go ahead and take it off the table, depending on the percentage that I want.
Makes sense. Neke, how about you? How do you know when you want to sell? How do you determine that?
Well, I'll just talk from a perspective as a beginner because I know a lot of people are tuning in because they want to understand. So I'll piggyback off of Adrienne when she said she moves her stops and takes her money and takes profit. That's what she was talking about with selling. So that's a trailing stop. So when you're, some percentage towards your target and you want to take some profit, then you move your stop up. As a beginner, do not trade without a stop loss. And a stop loss is just simply that price that you're going to go in the bathroom and you're going to throw up if you lose any more money. That's where I'm making it like simple for you to get. That's your price. So it could be $1 for someone. It could be $1,000 for someone. It could be $125 for the next person. Just whatever that is, put that stop there. But for a beginner, if you don't know the pivot points and if you don't know the market's in a correction and it's going to go higher, or if you don't know how to read the candles, I would say it's okay to get out of a trade 75% of the profit, because that means you're either a 1 to 3 or a 1 to 4. So that just means that you put up $25 to make 1 to 4 is $100. So if it's 75%, that means when you make $75, then you can get out. But 100% is the goal, to go the full range that you want to go. So if your goal is to put up 25 to make 125, if you've done the correct analysis, then stick with it, because the key to trading is consistency. You can't do different strategies and put them together and that sort of thing and do different things different day and expect to win in this game and be profitable in this game. You have to be consistent no matter what it is. And if you're a beginner, find a platform that you can simulate trade. Don't never jump in the market, not know what you're doing without practicing. You don't go to the NBA and never play basketball before or have never practiced, right?
That's true.
Practice. Find a brokerage that'll have a simulated count, and then make your margin and make your account at least as much that you would do if you were trading in real life. Like for instance, if you have $10,000, then make that account, that play account, $10,000. If it's $500, because that's what you're going to do when you hone your skills, do that. But sim, because that's when you can get your strategy down. That's how you can change your trade plan. Say, you know what, this doesn't work for me, so I'm going to try this. And then you do it for a while. You do it for like 10 profitable trades until you build your confidence. Then you go.
Man, I love that. I hope y'all take this and rewind that piece in particular, okay? Because some of y'all out here losing your whole shirt right now on Robinhood.
I want to add to that, because and I love how Neke actually said the simulation trade. And I'm going to say that is definitely important, especially because I know right now a lot of people have, there's this buzz around about options trading, right? And I'm telling you, I'm learning options trading. It is absolutely amazing, but I am not, putting my money out there and practicing to trade options with it. I'm actually practicing options trading and simulation, so that way I can get good at it and risk, my actual money in the market.
Yes.
Go ahead. 5, and I've told Angie this, options classes, and have not traded live yet, and it's okay. It is okay.
It's okay, y'all. You don't gotta bet it on right now. If you're new to trading, if you're new to the stock game, I love that. Use a simulator, and pretty much all these sites out here, you can probably Google a trade simulator, things like that, or even go through some of these brokerage accounts and start with the simulator. And go from there. Another question I see is, what do you guys think about apps like Robinhood versus investing with like a Edward Jones or Charles Schwab account? I know for me, I use the account I have my 401k in, which is Fidelity, because it was easy for me to just add my own little personal account, fund it myself and do what I want to do. So what are you all's thoughts about these various apps in terms of using that or using something that appears maybe a little bit more professional, again, more standard, like an Edward Jones or Fidelity?
Well, I'll quickly talk about that. I'm gonna tell you off the bat, I'm not a Robinhood trader. because I've been investing for so many years before Robinhood ever existed. You know, I'm on actual platforms like I'm on TD Ameritrade, which prior to TD Ameritrade was CloudTrade. They got bought up by TD Ameritrade, so I trade on that platform. I also trade through Merrill Edge, which is owned by Bank of America. That's also where that's where I have my IRA set up. So I actually trade on those platforms. I don't trade on Robinhood.
Would you trade on Robinhood, or do you know, have you heard certain things about it or anything in your research in terms of using it?
Me?
Yeah.
You know, I'm skeptical. And part of the reason is, you know, it's an app. You know, I know that they have like a website as well, but again, I'm not well versed in it. But one of the piece of news that I did hear, which kind of deterred me from even maybe trying it, was that there was some security breach in Robinhood where a couple of traders reported their accounts being broken into and trades being sold that they did not authorize, and they were having, you know, some difficulty contacting someone in customer service to help resolve the issue. So I feel like that's probably one of the risks when you're going through a platform like that, you know. But again, it's, you know, to each his own. If you want to go through it, you know, I would say go ahead and do it. I can't, because I've done much research on Robinhood. I can't advise to start, you know, having an account with them or not.
Gotcha. What about you, Nikki, in terms of some of these apps? What are your thoughts on using them?
I really don't have a thought on using them, except for that you have to watch out for the fees, and you have to understand, like, if this is one way or a round trip, that means from the beginning to the end of the trade and back. It's easy language. So I just look at that, but I want to trade how the professionals trade. So I look at more traditional platforms, like you said, like Fidelity. They have Fidelity Pro. Somebody spawned off from Thinkorswim.
Yeah,
I know about those. I don't use those. I'm a Trade Station. I am Click. That's fairly new. It's not even out yet, but I'm in the stages of helping test that, which I think, and the people who made Thinkorswim made Click. So they're not even really fully on the market yet. Also, I do Oanda. I like TradeView. There's so many different ones out there, but from talking to professional traders, from some of my mentors who have traded on the floors, I just trade what they trade. I'm like, trade how the pros trade. That's all I know. That's all I know to do.
Right. I think that's great advice. Trade like the pros trade. I also get nervous anytime. If I can't like reach you, I'm always a little skeptical of things.
You know, we talked about that. And so that's why I've had, like, your sister and you, like, you guys are a family who grew up with that. So you're more safer with that. But I've had like 401ks, annuities, and IRAs that were managed funds. Yes. And I wasn't seeing the return that I thought I could get. And I'm thinking, and that's one of my reasons why I wanted to trade. I'm like, you know what? I care more about my stuff, because when you, and this is just human nature, you cannot possibly have 100 clients and care about everybody. That's impossible. You know what I mean? I'm like, I care about me, and I'm confident that I care about me, and I love me. So that's how I do it. I want to control, because my failure is going to be my failure. My success is going to be my success. So I like to manage my own account, but you have to know how to do it, and you have to get there. Yeah. I don't want to be on hold. We're talking about my money. Don't put me on hold. You gotta go to the bathroom. This is my money. No one goes to the bathroom. Like, you know, like, what money we're talking about.
And piggybacking off of that, you know, I don't like the idea of being charged to get advice either. Yes. You know? So it's like, if I can do it on my own, I don't owe anybody any money.
And then, have you guys seen those annual reports? Like, I used to look at them, and they were like a book that they send you every year. Mm-hmm. And all of them show the fees, but you don't know the verbiage or whatever. But all of that is a fee book. I'm like, wait a minute, you got a catalog of fees? I want everybody to understand that book that they send you every year, that's the catalog of fees that they're charging you.
Yes.
No, that is fair. That that is fair. And I'll give you that. I will say on my end, as someone who has had I've had a mutual fund for almost like 15 years or so. I think for if you are committed to really learning and educating yourself on it and going and doing the simulators and building your education, your knowledge, awesome. Then absolutely. If you're similar to me, if you're currently working a lot, maybe, and you're not going to commit to really learning and understanding it yourself. Sometimes the good thing is mutual fund, that same money, even with the fees, has made way more money than I would have made with what I would have probably done, which is probably buy a car. Like I probably would have spent that same money trying to get a Range Rover versus just letting it sit there and do what it's done over the last years. And what you find is in time, anything that you have sitting in these investment things over time, I didn't see much movement until maybe like 7 years in, and then it almost felt like the whole thing doubled or something. So sometimes I think people don't give their investments the time to really like grow. So that's why I kind of like mutual funds, and I also like even with the fees, because I haven't been able to really sit still and commit at the way you all have done. Sometimes it has worked pretty good.
I want to give some quick advice about if you have a money market account or if you have a 401k and you're letting it ride, which is fine. But you remember the housing crash in 2009 and 8?
Yeah.
And everybody that worked so hard for their money and the mutual fund over 15, 20 years went down to nothing. And then it took them another 15, 20 years. Here we are now to build back. And so we're on that bubble where the market has been going up. We've been in a bull market for a minute.
Years, yeah.
Over the bubble again for somebody to do something for it to crash again. So here's my advice. So it's okay if you have an IRA or if you have a money market, and if it looks like bad things are happening, call them and tell them to put your money into cash. All they do is just take it out of the investments and you keep it in. You don't get a 10% penalty or whatever the penalty fee is to taking it out. Don't take it out. Let them keep it, but you're taking it out of the funds that you have in. And then when so you don't lose all your money. So let's just say you build it up over 15 years and you have $125,000, right? And then you see one of these things happening or something shady going on, call them and say, you know what? I just want to put my money to cash. I don't want to take it out. Just roll it over to cash. And then when you feel like the market is more stable, then put it back in what you had it in, what you're comfortable, and let them manage it. Don't just sit and lose your money and spend all this time building it back up, because it took you a long time to get there. And that's what the whole thing is for retirement, right?
Yeah. No, and that's real. That's one of the big things my dad kind of started teaching me, was like at some point, once it hits a certain part, you got to start managing these funds as well. So you should manage your mutual funds, manage your IRAs, manage your 401ks, because you can move them around. You can change them after a while, so that if you see, just like Neke said, if you see something might be potentially coming or you see a bubble, you can start pulling and moving your money in ways to protect it as well. So, definitely continue to do your research. Ladies, I appreciate you all for being a part of this panel and for telling us and sharing your perspectives. Yes, I'm just about out of time. So I just wanted to, I
had so much fun. I'm like, it's over?
It is. I know, right? It felt so easy, and I mean, we could talk for days about this, but before we go, I just want to, again, to the novice person who is just getting started or is interested in stocks, any last minute, like just words of advice or words to the wise before they jump all the way in the pool.
I say risk management is key. And just understand that there's somebody on the other side of your trade, and make sure that you have a stop. But also understand too that the big dogs like JP Morgan, they got money to run it up to get you excited and drop and stop you out, because they need the stops. So I would follow in their footsteps. So learn the charts, because When they move, you want to be that fly on their back that they don't even know is riding up that money. And when they change direction, you change with them. That's the easiest thing. Yeah, that's the easiest thing that I can tell you.
Yes.
Adrienne, what about you?
I would say always invest what you're willing to lose. Do not invest more than you can afford to lose.
Yep.
And I would also say always do your homework. Never buy blindly, never buy on the news, never listen to a friend that tells you just, hey, this stock, you should buy this stock, and then just blindly do it. Do your research and make sure that you only invest what you are willing to lose.
One more thing. Adrienne said something that's so important. Never trade the news. By the time the news hits, it's over.
It's already done.
It's over. It's over.
It's at its peak.
Yes, it's over. It's done.
Look, that's a hard lesson from all of us. I feel like all of us have probably traded on news and lost so big.
Never trade on this.
It was Under Armour for me. I tell that story all the time. I bought Under Armour because CNBC hyped that thing up, and it was up. I'm watching that thing keep going up. I'm like, man, this is a good, and it is a good company. But I bought because the news was saying buy it. I bought it at like $35. I think right now it might be at $7 or $9, but I watched it come crashing down way after. And I can't tell you how many times I've seen like the news talk about something and it get big, big, big. And then out of nowhere, it's like.
Can I talk now? You know what? Because we didn't cover this, but I like how you're sharing that loss, because I'm gonna talk about we didn't talk about the big loss and the big win. So my big loss was on Marley Coffee. JAMN was the ticker years ago. And by the time I heard about it, I was tipped off from a friend who said, hey, you should buy this stock. So without even doing any research, I put maybe almost $3,000 into the stock. And I saw it pump up in a day or two. And that's when I should have sold if I was smart at the time. But I let it ride and it plummeted immediately. And I lost pretty much the whole investment, and it never recovered.
Wow.
Big loss.
Oh, wow.
Neke, I know. Come on, Neke, share your big loss now.
Yeah, I don't have a problem with that. So I was just being a little too greedy and things were happening too fast, but I thought I really knew what I was doing. So I had a couple of contracts on the S&P, which is the ES, had one on gold, one in silver, that sort of thing. And then I did not realize that it was a major announcement that day. And the things start turning around and go so fast, and my heart started beating so fast I couldn't get my mouse to click to get out, and it was going, and I was crying and that sort of thing. And $3,000 later,
gone, just
gone.
Yeah,
because I was emotional about it. Instead of focusing on getting it out of the trade or playing defense against the trade, I just cried. And while I was crying, it was sad with me going down. So you got to take the emotions out of it.
Last thing I know. You're wrapping me up, David. But let me ask: is there any particular sector that you're really looking at? I know some people have been talking heavy, of course, about Tesla and the whole electric car market. Do you guys look at particular markets that you're interested in, or is it kind of more of a free for all? You just kind of look at various things depending on what comes to you. How do you kind of determine what you're really interested in terms of trading?
I'm I'm sorry, Nick. Do you want to go first?
Go ahead, Adrienne. Go ahead.
Okay. Well, I'm definitely all about just the markets that are of the future right now. So I am into the EV. I'm definitely looking into EV. I'm into cannabis. I bought cannabis and that's paying off now. I've started getting into cryptocurrency, which is paying off now as well. And that's an extremely volatile monster all by itself. But yeah, I'm into those sectors. And of course, the ones that are, present day doing extremely well, tech. I'm into anything tech, fintech, just kind of look at the industries that are working right now and as well as industries of the future.
So As far as day trading for stocks, most brokerage firms require that you have 25,000 if you're going to be in and out of stocks on day trades. So that's why I like the futures market. And that's why I like the ES, which stands for the S&P 500. So those people who are interested in those top companies like Tesla and Amazon and all those who can't normally afford to get them on a regular basis, they can buy contracts and move the same way. So that's just an easier way to have control of something that you can't really afford. So that's why the futures market.
Gotcha. Well, ladies, I mean, again, you know, we could go on and on. This could be like a every week thing, for real, for real. Karen, hook it up. No, but thank you all so much for participating. I hope for everybody that's watching this, you've been able to get something out of this, learn something new. Maybe you heard a lot of terms that you've never heard before. That's okay. You can look them up. You can Google. And if, I don't know if you ladies are open to people reaching out to you or just in general, but if you want to share your information of how people can keep in touch with you or follow you, do so. Or if you just want to leave us with a little nugget, we could do that too. I'll start with Adrienne. You can plug our newsletter.
I know. I'm plugging our newsletter, Stock Snoops. Stock Snoops. Please sign up. We send valuable information every week so you can stay and be an informed investor, so you are not blindly just going into stocks. We definitely, we share articles. We share stocks that's on our radar. We share our personal stories. And Ange can share the bit.ly. Is it the bit.ly? Is that the link?
Yep, bit.ly/stock snoops, all one word. That's bit.ly/stock snoops. Just put your email in there and you'll start getting it once a week on Mondays, Money Making Mondays.
That's right.
Yeah.
And for me, it's just your girl Neke, Facebook, Instagram, and Twitter.
It's your girl Neke.
Allow me to be on.
Yes, thank you all so much. Andy, we love you. Thank you so much. Hopefully this has inspired you to jump into the stock market. Don't be scared of it, but do your research and be careful and invest what you're willing to lose. All right. Angie, I'm gone. I'll catch you on the Morning Hustle Show right here on Hot 96.3, Monday through Friday, 6 a.m. to 10 a.m. Thank you all so much. And let's get this money in the stock market. Hopefully. Oh, and disclaimer again, we are not financial advisors. So remember, before you do anything, seek professional financial advice from people who are licensed to do so. And what we're sharing with you is our experience. Okay. Don't be taking this information saying Neke told me, Adrienne told you, Ange told. We ain't tell you nothing but what we've been through. And that's that on that. Okay. Y'all be safe.
Adrienne.
Thank you.